I hope you're well on this Friday. We are about to get into it and do what we do best. Put our heads down, take a look at the markets, put the work in and make sure that we're able to stay on the right side across markets. Fabi, a lot of people are surprised by September. I am absolutely one of them. I was looking ahead at seasonalities, expectations. Coming into September, we've been running so strong ever since April. D-Day, Liberation Day, right? And there's no question. I was like, wow, have we come too far too quickly? Checking with all of you mid-July. Okay, probably into the beginning to mid-August, we even make another higher high. And then I expect by, the later part of September, we're probably trading lower than we are. Not the case. Even today, with the massive options expirations, still markets able to hold on. The bid has been incredible. I received just a message here going live from a close friend, and they were wondering, is it a good time to borrow against my house and invest money into the market? What would you guys say to that? What do you think? You know, I have a great let's say ability to take on risk, and that's not something I would do. That's not something I would do at all at this particular point. I think that that's something that you consider doing during bear market lows. If you know when the low is, that's another story. And I don't think it's something you do during the heights of a bull market. And then the question, well, what are we in now? We've been in a bull market here since January of 2023, and it's not just an ordinary bull market. There's only been three other bull markets that the S&P had back-to-back 20% plus gains. The bull has been roaring, and it's been doing that while monetary policy has been tight. Now there's warning signs out there. Job market, it's getting dicey out there. And man, what's going to happen a couple of months from now when, a lot of those government employees who were left off, they have been out on severance packages, and when those dry up, is that going to be are we going to start seeing, like, not a deterioration but a holocaust of the job market? I'm not sure about that. Is that going to affect this bull market that is roaring? That is right. So back to back years, 20% plus gains, and I remain wildly optimistic about 2026. Now, many within the industry are voicing extreme concerns. It's also true many in the industry have been voicing those same concerns since 2023, all through 2023, all through 2000. It seems like the most popular macro channels are all doom and gloom. Now, not everyone. I am seeing personally a major shift. And that shift has occurred right around the time we got the jobs revision. At that particular point in time, a lot of people were like, you know, people watching reverse repo. A lot of people are very concerned that shock and awe is imminent, and that we're about to, enter into a really bad situation. And you have to really, I value all different opinions, informed opinions, and I try my best to really check my own bias, to consider them. I don't want to be caught blindsided, and I'm not talking about our position. And by the way, Bitcoin, just saying, you know what? I'm out of here. Exit and break even. I'm not interested in this price action. Bitcoin bull run still in the market. A lot of people now, you know, I saw. Hey, listen, I saw, people are, September was fantastic. Probably, October, November, December are going to get even better. I'm not so sure. I think moving out and into that first quarter of 2026, I have I think that we're going to be doing really well. I definitely believe that. I have to watch out from where I'm wrong. I did say, listen, I highly advise against that. I think that's something, if you were considering it, you do during a bear market low or at the lows, not at a bull market height. And maybe if you were talking about buying Bitcoin and gold, and you were gonna, you're holding that over the next decade, and then maybe I would consider, but I wouldn't tell someone to do, like, you would have to have that own knowledge of and understanding of not only money but the financial system and the shift that's taking place. And this is not this is not a lot more of the same. This is extremely different, and it's a lot more of the same. I was looking at this chart here this morning, and I was focused in on this area of in the 1940s. Well, first I was focused. This is horrible. Look at this. This is a awakening for everyone. This is called the lost decade. This decade has traumatized a whole generation of investors. Maybe that's why all of these, they seem to be older than me. I'm Gen X, but a lot of these doom channels seem to be a little bit older than me. And maybe this is why, for me, it was the best environment to begin my journey into the markets. You learn to trade through this, and then I'm look at this monster, right? By the way, this was back to back 20% years. Nice big correction, April 2023. And what was it over? No. Did it end badly? Yes. That's, I mean, when I see patterns and fractals like that, I'm like, whoa, because that seems to be my general assessment of what's to unfold. That we're gonna reaccelerate. Bull's gonna be running. We're not in a bubble yet. We're going to be in a bubble. And not only that, inflation's going to be kicking up. And not only that, growth is going to be slowing down. And it's going to be bad news bears. I see that coming. But hey, maybe there is this productivity miracle. Maybe, instead of 10 years from now, 3 years from now, AGI takes place. Maybe fusion, you know maybe all of a sudden nuclear fusion is able to take place. I don't know. Boomer doomer. And then this is a bad one too. The 1970s. Look at this. Oof. Talk about oof. Mega moves. But I'm reminded of the 1940s and the last time that we saw fiscal dominance. And this is when they had to implement yield control curve. And it was right over here. It was in April of 1942 that the Federal Reserve and the Treasury need to go ahead and implement yield control curve, and risk just roared on it. This is when they ended it. This is weird. You like they couldn't keep it going. It was impossible. And when they ended it in 51, markets responded extraordinarily well, which is interesting because you would think, like, they're being forced to end yield control curve. This is gonna be bad. It wasn't the case. Um, so you know, but here's the thing, and even though I have perhaps the ability to take on extreme, I don't see the need. Like, and telling them, listen, you have enough capital in the markets over the next 10 to 15 years. You can make very smart, calculated returns and do extraordinary things. A lot of people overestimate what they could accomplish in 2 years and drastically underestimate what they could accomplish in 10 years. There's no question about it. Everyone is focused right here instead of like the big picture. And not only that, man, financial strain, if things go bad, financial strain could put so much pressure on marriage and family. Does it seem worth it? Do you need, like, is it right here? Is this the place? And then I worry, Wow. Whoa. Jordan, you are bullish, and now people are talking about taking some, let's say, is this bull market top measures? I don't know. And this is that's the hardest time. The hardest time is when there's fear in the market. And even if you do it, like even if, you know, March 2020, Bitcoin collapsing like this, and even if you go ahead and do it, like it doesn't feel easy. Any like bit of it, it feels really difficult. And actually, those are the best times when it is the most difficult, right? When it's like, oh yeah, up and so yeah, I remember that period so well. Let's take a quick look at Bitcoin together. And I was just spending a little bit of time on this fun Friday, and I'm looking at this chart, and wow, Bitcoin has come a long way in these 2.5 years, right? From call it 17K, 117,000. Get off the log on this linear. It looks like a mega bull. I wonder, is it? We looked at this before, and we looked at, oh, is this a an accumulation cylinder? And it could be. Except I don't spend any time on the linear with Bitcoin and the gains that it makes. And you come down, and you, if I was on the linear though, right? And I'm looking for when that first potential breakdown is coming into the market. I've seen some people putting, well, I'll go back to that in 1 second. Right. So that would be a very clear trend line break. Well, did it occur already? If you're playing these games, and I'm not, we're not playing these games. I'm just looking. That that's a sell impulse in play. That's a very this is, by the way, I love when these other people come, and they learn and then incorporate into. I love seeing CTM TA expressed everywhere. I love people, taking our memes and pretending they're their own. I love people taking our culture and pretending it's their own. I love it. I love seeing it out there. Uh Listen, it is what it is. Is this a breakdown in play and a retest? Right? That looks pretty bad, you know. Coming back into the pocket. What is that pocket? 100K, just under. Is that bad? No, that wouldn't be bad. What about, would we be making a lower low if we did that? You know, we have a nice swing low over here on the weekly, right around 98,000. Taking that low out and then a sell impulse. That would be what people likely will refer to going forward. Would have been a mini bear, right? A mini bear. What is a mini bear? I have no idea. Is a 30% correction on Bitcoin a mini bear? Was this a mini bear market? No, not to me. That's a consolidation in a bull market. Do people refer to this as mini bulls and mini bears? Maybe, right? But that's nothing more than a consolidation in an uptrend, which resumed up. Is this a consolidation? That's a nice descending wedge that was able to rocket out of there. And where's our, there we go. Where's April? March, April. Yeah, that was stress out on the markets. Mega uncertainty. What's going on here? Has the market been able to see past all of that? Or is there still a lot of uncertainty out there? In so much as that Powell got it wrong. Powell thought, oh, this is going to be inflationary and this is going to be passed on to the consumer. None of those things have happened yet. Some people are eating the cost, though. The middleman, they say. Is that going to eventually be passed on to a more and more suffocating U.S. consumer? we are seeing a greater divide than we've ever seen before. There's no question about that. I want to just dig in over here and look what this looks like, because we just kind of looked at what would be a retest, and then that's something to watch out for those that are trading, discretionary on smaller time frames. You have a breakdown. This is linear. We're going to start on linear, then we are going over to log, and this is the retest. And if you just jump in over here to the 8 hour, you could see that, is that, I don't even like that line. So what's cool, I'm gonna show you what I just did because I want you to see it. I didn't like the angle. All right. And then notice these two touches. Okay. That actually gives the correct angle. And then notice this. You cloning it up. Look at that. So this is, from my opinion, from our TA, this is the correct way to draw the line. A lot of people would draw the line like this. This is what would be a confirmation. And is this an underbelly developing resistance into the support? Is that like for those that are aggressive, close below here? Is that where you have the best opportunity? Like, which means that your win percentage is going down if you're being aggressive, but it also affords you the opportunity to manage that risk the tightest. So that's something to watch out for. If I'm watching out for what we got to watch out for, that a breakdown over here, resuming taking out the low over here from August, and likely we have a date with the whole number $100,000, and that's almost that's a legit pullback. Anywhere 25%. This cycle has been a very, very big pullback. 30%, three times. This has been the largest. We've talked about our expectations of having diminished downside volatility, but we're in a bull market. If I mean, granted, during the April scare, Bitcoin also only corrected 30%. But if things were to deteriorate a lot further, markets were to begin correcting, crashing, and everything, Bitcoin's going to correct more than 30%. Now, the question is for a lot of people, do you see a 75 to 85% correction, or do you see something that's notably different, like I do, somewhere between 40 and 60? And when I go to 60, I think I'm trying to be extreme from what my expectations are. And of course, fast forward into 2026, and if we are into a deflationary bust, obviously we all know that that's going to be a lot worse than expected, but that's not what's expected. By the way, looking at this is kind of cool. I was going to go 2 slides and then back to Bitcoin. And well, there you go. And that's the worry. And that's the China reminder. China 2022, China 2023, China 2024 just can't get. But the Federal Reserve is tightening through all that period, and central banks worldwide were tightening, and that made it a lot harder for China to get out of the quagmire. A lot harder. When central banks act in unison, it's forceful. When you have one central bank acting versus the rest, it's hard. And this is likely why they did not go ahead and fire off a mega bazooka, because they know that it would have crushed them. Now, the Federal Reserve is loosening it up here. They're beginning to make a turn, and we'll continue to see. But expectations, I think, have gone rather quickly from maybe a 25. How bad? Like, do these guys lie to us? Not even a few weeks ago, right? Federal Reserve board members are like, maybe there'll be a 25 basis point. I'm open to a 25 basis point cut this year, maybe in September. And now we're expected not only that 25 basis point we just had, 2 more cuts is the expectation now, and whether or not it winds up being that, more or less, we'll find out. But these guys have a really strong history of just really getting it wrong, really grossly mismanagement all the way. And what's going on with these billions and billions of dollars they're spending on their models? You know, who are they hiring? What's going on over there? Um, but I was talking about something, and that's something I completely forgot. So disinflation. But now that they're easing or beginning to ease, if we start seeing central banks around the world easing, China's starting to, you know, at least their stock market is obviously been mega bullish. If they begin easing and or, you know, central banks return to the printer. I don't want that to happen soon. I hope that doesn't happen anytime soon. But when that does, it's going to be, I guess people call it the big print until the next big print. The probability of a pullback this year compared to a strong Q4. I'm just so surprised right now that the seasonality is not on Bitcoin. Bitcoin is consolidating, running flat over here. Nasdaq all-time highs. Check this out. This is the history of great bulls and crashes. And just check this out over here. When you look at the average of all bubbles, they have everything from crypto. This is so silly, right? This was like an extremely subdued bull market for Bitcoin, but whatever, it's included in there. Yeah, even the rise, 166%. And so listen, take this with a grain of salt. I don't know who's doing this. Like, why does the I guess March is the low. That's fine. That's when we had the mega Big Mex feedback loop. I don't know why you're not saying we're calling it December 2018, but whatever. Um, you have ARC. I'll take this even more with a grain of salt, I guess. You have a massive Chinese bull market, though. Back in 2005, I remember trading the Hang Seng back then on the futures. Talk. You have no idea. That thing was like, like forget about it. Even when in April, when the NQ is moving, 10,000 handles, it was nothing compared to that. Gold 78 through 1980, that was a nice bull. The Nifty 50, the Roaring 20s, the South Sea Company, we're going there. Anyway, if you look at these bubbles, so in looking through what they're talking about, I have less credibility for it, but that's fine. The average of all bubbles is 612%. And then you could see right now the Magnificent Seven. They started this in right over here. This is when we said if this breaks, it's going to melt up. This is when Jim Cramer, about 2 weeks later, said that the Nasdaq was going to melt up, and Dr. Michael Burry told you to sell. Right? No one talks. You got to give credit where credit's due. Cramer called that thing. He thought there was going to be a pullback, and then it was going to rip, and it just ripped. But even still, like, he was close, very close, and this thing still have a long way to go. A long way. What about PE valuations? 39 times. You go back towards Fang, not too long ago, 60x. Where's the .com? 65x, 39x. Overheated for sure. Data centers, Alphabet, Amazon, Meta. Did you see those ridiculous glasses that Zuck is releasing? Those like big, fat, black, ugly looking glasses. Man, it makes you just want to like, is now the time to sell Facebook, you know? Collectively looking to spend this year 2000 and $364 billion. Nvidia, large beneficiary of that. check this out over here. Oracle. Remember Oracle's earnings the week before last? And that seemed like bubble things to me. Their projections in 2030, but who knows? Who knows what happens when you have Stargate and government contracts, and who knows? But they're talking about some massive, massive build of their cloud infrastructure. They need to invest billions and they need to raise billions in order to, like, their deal with OpenAI. It's like this feed. It's all Fugazi right now, but now it's Fugazi. Is it going to end anytime soon? What is the Mississippi? I'm not familiar with this one. Mississippi Company. That I'm not familiar with. I'm not familiar with that one. Government bonds. Looking at that massive deflationary. I'm sorry, massive globalization period. Probably kicked off by the Chinese entering the WTO. And now is that happening or the opposite happening? Right? We've gone through this massive, massive globalization period. And now look what happened in April. It seems like the exact opposite, blowing up. Greatest wealth shift is happening right now. You all know what it's all about. Bitcoin, tech, gold, hard assets, technology, CTM, templates, modeling, smart calculated returns. You need to take on more risk than you need. No, you need to have the right time preference. You need to be continually looking to make those small incremental gains and then watch as it adds up. Now is not the time to take on risk or to take risks or take on risk. NASDAQ. So Bitcoin from the perspective of the linear, I think that's pretty good awareness. I think something to watch out for. Hitting on a log over here, right? What a massive, massive, massive move we've seen. However, Bitcoin so far has never topped when you're seeing an angle that's like, let's call it 25% here, right? Now this is a small angle over here, right? We never actually launched off into that price appreciation. It is steeper though. This was a pretty steep one, right into Elon Musk messing things up, right? Between 70 and 60 over here. This was the major breakdown. I'll put it over here at 65. Elon, not a friend of Bitcoin. This was a massive run, 65 again. That was a massive, massive price. I think that guy from Galaxy, Mike Novogratz, called it, and I think one of the Winklevoss brothers did too at the time. The move and into where it topped. And then what about over here? This looks like extreme. Getting over 65 is extreme. Coming into here, that was mega. What about the old one? That's about 25. That didn't break. That broke up. Didn't break down. So far, look, forget about this nonsense. 75 again. Oh, that beats the 70 over there. That is. And what's this? This is. Wow. 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 But Bitcoin has so far to date, and I'm going to show you on the NASDAQ next, it's never topped at such a low angle of ascent. Sustainable channel. Sustainable. Now, a lot of people, rightfully so, they look back 2.5 years ago. They're like, Bitcoin was trading sub 20K. It's trading at over 100K today. That's a 5X. That's intense. That's insane. It's the 4-year cycle. Got to get rid of it. It's the top. Could happen. And again, that would be the max pain, I do think, out there. If you were to see, great morning, if you were to see Bitcoin top without any type of euphoric price action, even if that euphoria only brought Bitcoin to 170, 150, 170, happening right now, this time of the year, into that 4-year cycle pocket, a lot of people would, they would be, all right, they would be distributed, taking profits, getting themselves into a position of power. You know, over here, though, if even the doomers I know, they all think that markets melt up before they come down. Markets break down over here. I think that's max pain. It's never happened before here on Bitcoin where you've had a top at such a low angle of ascent. Just what about the Nasdaq? How about let me just try to come over here on the same time frame, and I looked at this earlier, and here's one that I could give. That's not what I'm looking for, obviously. Where'd I go? Where I get my angles from? Even that is, we're at 25%, right? These are 40. Here is this 25? 30, but it didn't break down. It broke up. Here you go. This might be the one for us. 35. It's pretty close. It's pretty close. That's pretty close over here. But by the way, even more importantly, potentially, look at let's throw a trend line over here, right? So, man, how do you do it? It's so late, right? That right there is as early as you could be. It's very clean. Bitcoin on log right now, to have anything remotely like that. So, oh, those backwards. I don't know what's going on over here. There you go. That's pretty clean and clear, and that is 100K, $100,000 Bitcoin. We looked at it earlier on the linear. That was 98,000. That would be a sell impulse on the retest. Bitcoin right now on linear is broke down, coming up for a retest. If it breaks down 98,000, that would be right around lined up here with the linear. You go taking out that last swing low. Bitcoin does have a habit, though, of kind of sweeping lows like that right before it makes that mega move up very often. So what you have to do there, and look over here, is sweeping a low, right? Sweeping a low. So throughout this bull market, here's sweeping a low, and then sweeping a low. So if Bitcoin comes down over here and takes out that 98 low right over here, you have to, if you are positioning on that technical breakdown, you have to look for where that repair is. Like, that's great. You caught a breakdown. That's the earliest opportunity. And that could actually be, something that leads to, I'm going to call a mini bear. But you have to watch for when the buy impulse kicks in, where you're wrong. Just because you get the stars aligned and you're taking your shot does not mean that it's gonna be that one. And more importantly, you have to know where you're wrong. Now, what that looks like, I don't know. It depends on the situation. Here you could see someone, all right, sweeping that low. I'm mega bearish. Where you're wrong. That's more important. Is it something like just simple like that? Same thing here, sweeping the low, simple like that. If that happens again down over here, or you can do something simple like, doesn't matter what you do, so long as you do it. You have to manage your risk. You have to be ready for where things are turning sideways. And if you're, making a big decision here to pull back, to sell, to short, if you have to know where you're wrong, and you could see these past sweeps probably got some people into trouble. It's hard to say. it's hard to say what's ahead. Bitcoin bull runs is still holding into the market. We know we just exited here, break even. We still have Ethereum and Cardano in the market. Bitcoin bull runs is in the market right now. And then I just want you to just peek at the V4s over here and how they maneuvered. So I felt a little FOMO on Bitcoin, but it just did the right thing, not engaging as our V2 in and out, break evenish. Same thing here. Ethereum out on the sidelines. And you have the alts. No wonder BNB is rising. Alts here have been a little bit frothy. And, Binance is probably banging up those fees. Binance, if and when I don't say alt season, only because I think it's going to be very selective until we get to a place where monetary policy is actually aligning. And then like this is not animal spirits running wild. This is selective, rightfully so, at the correct place on the risk curve is where a lot of funds have been deployed, and that happens to be a lot of tech. You can even see recently, I mean, Bitcoin is just, since July, it's just consolidating. There was a nice grab up over here. Is that a Wyckoff distribution? That would be like this. This would be the breakdown, and that's a little bit higher than our area, by the way. So this is a good angle as well to be looking at. Again, mini bear is a lot different than bear market, next 12 months, major correction, but we all know that. Wow. That's I don't call it alti. I don't know what to call it. That's popping off going on. Bitcoin is doing, like, listen, when Bitcoin does make its run, you're just simply going to wish it had waited longer and you had more time to accumulate. Bitcoin is not about to have a euphoric 2x in the next 40 days and allowing you to sell 210 and then go down for a 75-85% correction and allowing you to, buy that playbook. That's the past. You have to be able to get into what's happening now. Stocks, though, continue here just to, I'm so surprised by our positioning. I can't believe that, these positions kicked off and that they continue to hold. But we have FNGU up 10%, TQQQ up 9%, and Tesla up 14%. IBIT still holding over here. It's still holding on to this trade, much like Bitcoin bull runs. And we are positioned on the right side. Guys, do this for 10 years. And then you're going to want to do it for another 5 because the compounding effect is going to become so massive. Guys, I can't wait. We are on the verge, literally on the verge. And the thing is it's so complicated, you have no idea. And even still, last minute touches need to be, not on the modeling, but on the mode itself being worked out. And then, what a tool to have in our arsenal. What else is going on today, y'all? It's a Friday. It is, lots of doodling going on over here. A lot of people scared about shots fired out of Japan. Japan's bonds, though, long end going bid now. So I don't know why. Go to the daily over here. A lot of people think those rate cuts have a lot of similarities to what happened last. Do you remember last September when the Fed cut and we were like we lined up both the 10-year and the DXY looking for that price appreciation out of the dot. Is that the same playbook as a year ago, or is this a little bit of front running of the cuts? Cuts come into play. Is this just a bounce? I lean towards this is a bounce, you know, and not that I think that bonds are about to break down and head towards 3%, but if they did, that would be a nice reprieve. Look, Ace, I don't know if we're about to see October at all. I just can't believe that we're even in this position that we are right now. And it is nice holding positions that continue to build. I'm looking down over here, and I'm looking when price, traded below it, and that was during the D-Day, Liberation Day, what, and obviously people's focus were not really like on triple levered biotech at that moment, but that, like, when you take out lows and then you come back above them, that I'm just more interested, Ace, what's here to help you in the future, right? And again, this is not really where the focus was at that particular time, and I think for good reason. And you know, is this thing about to roll over? Markets are so ridiculously correlated, and what's the dollar doing today? Ever since Powell's come in, and not much. Setting up for a long here. Man. If the game has changed, how can we trust back-tested data? The nature of I'm going to Bitcoin now, right? I'm getting off of tech stocks, and I'm coming over to talking about the nature of Bitcoin and that diminished volatility. And again, during that diminished volatility, I'm like, guys, my expectations is that most likely the highest probability is we see something that looks like this. Like this. And yeah, let me get rid of the hide the price bar, otherwise people get confused. I mean, man, Palantir and Oracle taking over the world, taking over the domestic US surveillance. Man, Peter Thiel. Has Peter Thiel ever made a bad investment? I would like to know about that. I read his book. What was his book called? Something about, like, I don't know, forgot what it's called. Something about startup. Book was terrible. Um, but he's my man, not my man. Peter is invested in Bitmine. Likely Ethereum is the chain chosen for the US Treasuries. That's probably why he's invested there right now. I don't know. So let me just jump over here. Jordan, your current screen setup doesn't show the chart of what asset is showing. You're looking at Bitcoin right now on the white, and below it, you're looking at Amazon. And we've talked about, or I've talked about, why it's Amazon is the example, but this took place on MicroStrategy throughout 1985 into 2000, and then MicroStrategy coming out of 2010 until today entered this phase again when Microsoft was able to get into cloud computing, Azure, and like reinvent itself. And we've seen other assets like gold, Tesla, Ethereum's going like it's it's what I believe is the technology adoption life cycle. It's what price behavior undergoes on an S curve. And it's uncanny the similarities that the hype phase over here between the two, and then coming out into what we call the facing reality stage. And it's unbelievable. And including coming into the early majority, Wall Street's here, corporate America buying Bitcoin. Guys, go back into 2017. That was not on the radar. That was not on the radar. Maybe if you go into Nakamoto University, you will find the playbook that Saylor is executing was played out by Bitcoiners. So what I perceive, we're in the sustainable channel, price action just resembles each other. I could foresee, I'm not saying that this fractal, like there's been major deviations. There haven't been major deviations, but there's been deviations. This is the global lockdowns over here, and I don't know what was happening here with Amazon. And down over here on Amazon, there's a major deviation that Bitcoin didn't go through. Like there's been major deviations. Zoom out, they're not so major. Zoom in and you're focused on what's happening today and this month, and there's major deviations. But I could see Bitcoin 25% angle of ascension breaking out to the upside, accelerated price behavior, and then putting in a legit correction 40%. 40% would be lit right now. I don't think 40% is going to happen without first a bit of an ascent. And I'm not talking about price going euphoric, but like out of its current angle briefly and then reverting back. And then but the point that was brought up, and I really want to get into by Jay Cora, like even if this is happening, the price volatility is roughly the same throughout all of this, instead of these like massive bursts of vertical rise. And we looked at those angles, and those angles are 70, 75, 80% massive price appreciation. And no, I don't think that's happening again. I outside of an adoption event, which I think could trigger a massive, if that were to happen, race into Bitcoin. So the question is what does that mean? Well, I think this is really where V4 comes into play and focus over here, in so much as that V4, looking at what it's doing during this particular time frame, forget going back in history, right? Just in the last 2 years, the last 2.5 years, you are seeing Bitcoin demonstrating this reduced volatility, which I expect continues with brief excursions up and down. And those brief excursions up and down, I expect, compared to past behavior, like going back into 2000 and even 21, 2020, 2021, December, January. Like, I don't think we're going to see that. We were looking at a 75% rise there. That's pretty strong. I don't think we're going to see those things outside of an adoption event. And if we have a lot more of the same, what does that mean? And then I think that this is really where we begin to see the difference. And thank God we have this opportunity here to be able to to maneuver as such. And of course, that's Bitcoin going up and to the right, you know? And Bitcoin doesn't always go up and to the right. If you were looking this in April when Bitcoin corrected 30%, this is massively outperforming, but you don't know what happens with Bitcoin. You do know that if you're able to take a mechanical methodology that, you know what, I'm not just like hoping things work out well, because look at the gold bugs. They were pretty certain of what their expectations were, and not now they feel good, but it did not play out on their timelines whatsoever. And yeah, I think that this gives us the ability, the edge, that even in a reduced volatility environment, we get to tremendously outperform Jay Cora. We're humming. I'm not yet trading it, and it's being worked out so that it could be, we get the release out, the final release. So I think this is probably one of, this is really important over here. I don't know. So isn't there $7 trillion right now? Could you fact check me? Faster's better. I'm talking here. No. Smart calculated returns. Faster is not better. But could you check how, I thought it's $7 trillion. Is it $2.2 trillion right now in money markets? Could someone fact check us right now and let us know what it is? And that's been highly stimulative when the yield that's being collected on trillions of dollars. Granted, this is towards that top 10% we've been looking at, top 20% that continues to thrive. And, yeah, we're going to see that money start coming less and less. It's less stimulative, but then that money needs to go somewhere. Where is it going to go? Right? From Fred. We trust Fred as much as we could trust Fred. As much as we could trust government data. That's a good one. Robert, what a great week. Hold on one second. What do we think about updating severance every year? So like you go back to CTM, a 2.0 released, finalized by the summer of 2022. Those settings are not changed. V3, the only adjustments we made was when Bitcoin bull runs, when momentum, Bitcoin, the bull of all bulls, the rising tide that lifts all boats, when it's in a bull run, we loosen up a filter on Ethereum. And when it's not, that filter's on. That's something we learned. Solana also, we learned we need the looser filter on the buy side. Those were the only changes and a stop loss that were made on V2. I mean, incredibly stable. And, could we potentially have modeled even better? Maybe. It's still tremendously great. And with V4, we've taken that time instead of just like getting it to market, but making sure that we have that, what we believe is it's going to be stable going forward. So we want it to be best modeled from the release. And I don't think it's going to need to be changed. And, if it's able to maintain the current volatility that we have, which is very minimal, and perform as it is, and then going back when that volatility kicks up, it's there to capture even more. I don't think so. I think that the more correct thing that was done, and guys, we were just building, getting it going. Nothing was wrong, but what was done even better was, this is now going on 2 years, right? It's going on 2 years. That's why we skipped V3. You just went straight to V4. All that work, that's tremendous work. Big shout out to Hey You and everyone involved, but that tremendous work. This one wasn't rushed. This one is done right so that when it's released, our expectations is no, it doesn't need to be changed. Uh, with new history or anything like that. On the buy side, ST2 was taken off a long time ago. I not Solana has a whole new um version here. This is before though. Yeah, I agree with this. I love this over here. Glad you're here with us. Faster, better. Bitcoin is technical and it becomes fundamental. And there it just reminds me, we're seeing a massively fundamental shift taking place in gold. And right now, we're looking at, I think I saw a stat. The gold right now has the highest reserve allocation that it's had in the past 25 years, now making up 25% of all central banks' reserves. Do you guys? I don't think that's stopping. I don't think that trend is coming to an end. I think that trend is going to be accelerating. Remember, as we continue this monetary reset that's taking place. When we talk about that shift, this is the shift that's taking place. And right now, Bitcoin's been, since its inception, the greatest beneficiary of that. And come on, guys, it's gone from nothing to over $2 trillion market cap in record time. And now you've seen, okay, Wall Street's here. All right, corporate America's here. Right, sovereigns are here. Like it's reality, pension funds, blah blah blah. And that is not changing, and that's going to continue to accelerate. And right now gold is, this is a fundamental change that's taking place here on gold, and that's not going to stop either. They're going to accelerate. And when and if it comes to a point in time where these central banks and sovereign nations begin to accumulate and stack Bitcoin, that's a fundamental shift. That's a fundamental shift. All right, y'all. Sunny Friday. Beautiful weekend ahead. Bulls are running. Everyone, God bless you. Thanks for being here, fam. Have a beautiful day, everyone. I'll see you all on Monday. We're going to go ahead and do what we do best. Do it again. If you're new here, join us. Subscribe right now. Everyone, I'll see you soon.